In this video, we're going to talk about closing entries. Closing entries, or closing the books, means to prepare the accounts for the next period's transactions. The closing entries set the revenues, expense, and dividends balances back to zero at the end of the period. The idea is the same as setting a score back to zero after a game. All temporary accounts are set to zero. An acronym to remember the temporary accounts is RED, revenues, expenses, and dividends. Closing entries transfer the revenues, expenses, and dividends balances to retained earnings. Here are the steps to close the books of a company. 1. Debit each revenue account for the amount of its credit balance. Credit retained earnings for the sum of the revenues. Now the sum of the revenues is in retained earnings. 2. Credit each expense account for the amount of its debit balance. Debit retained earnings for the sum of the expenses. The sum of the expenses is now in retained earnings. 3. Credit the dividends account for the amount of its debit balance. Debit retained earnings. This entry places the dividends amount in the debit side of retained earnings. Remember that dividends are not expenses, and dividends will never affect income. We're going to illustrate closing entries by using a fictitious company, Black Squirrel Ventures. We will use its trial balance. The first thing we take note of on this trial balance is the beginning balance of retained earnings. We set up a T account for retained earnings here. The T account will contain this beginning balance of retained earnings that we got from the trial balance on the previous slide. Retained earnings has a credit balance. The beginning balance goes on the credit side or the right side of the T account. So now we're going to look at the closing entry for revenues. We see our revenue, we see the sales revenue there, and the closing entry will debit sales revenue for that amount that we got off the trial balance, and it'll credit retained earnings. Since we have a credit in our closing entry to retained earnings, we put that credit amount on the right side of the T account for retained earnings. So we see at the bottom there, I put that closing entry that we just did. It's just a copy of the entry that we just did. That credit to retained earnings that we just had to close sales revenues goes on the credit side of retained earnings. Next up, we have the closing entry for expenses. We have, in this case, we have 4 expenses listed: cost of sales, operating expenses, interest expense, and income tax expense. So what we're going to do is we're going to debit retained earnings for the total of those expenses and then credit each one of those expenses individually. So that's our closing entry. So then we're going to go back to our T account, and we're going to, at the bottom, I'm showing you the closing entry we just made. We're going to transfer that debit to retained earnings to our T account for retained earnings. So the debit is going to be put on the left-hand side of that T account because that's where debits go. Next, we're going to do the closing entry for dividends. Dividends are the final category of closing entries. So we see it there, dividends is there. So our closing entry for dividends is going to be to debit retained earnings for the dividends amount and credit dividends for the amount. And then we're going to transfer that amount over to our retained earnings. So at the bottom of the screen, I show you the closing entry we just did for dividends. So that debit to retained earnings goes in the left-hand side of the T account under dividends. Now, just a word here. Not all companies pay dividends, so there may not be a dividends closing entry. Here we have one, but you may not always have one. Now we can calculate a balance for the retained earnings T account. We're going to take the difference between the total credits and the total debits. The difference will go on the larger side, which is the credit side in this case. So we see that the retained earnings has an ending credit balance. We have now done all 3 closing entries for Black Squirrel Ventures. By the way, we can look at the T account for retained earnings and calculate net income. Net income will be the revenues closing amount less the expenses closing amount. So you can calculate the net income that way. Notice that dividends are never part of net income, so they do not get subtracted to calculate net income. Just to recap, closing entries have to be made to set all revenues, expenses, and dividend accounts to zero at the end of the period. Those are the temporary accounts. Companies also have permanent accounts, which are assets, liabilities, and stockholder equity accounts. Permanent accounts are never closed. That's it, we're done. This video was created and narrated by Dr. Wendy Tietz. Have a great day.